Hi, and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will give an update to my portfolio, and then I will talk about how the start to the year has been. If you, for instance, are a new investor and you have been investing in index funds or just broad market funds, why you shouldn't be discouraged that you are severely down on your investment, and why you should continue to hold on and focus on the long term. So let's start with a portfolio update. The first thing we immediately notice is that there was a green circle for this week's episode, meaning that the portfolio is up in value. If we then go to the portfolio values tab, you can see that the portfolio is up more than $12,000 compared to last week. But of course, you also have to note here that the cost of the portfolio has increased with a little more than $7,000. So in reality, I am only up a little more than $5,000 for the week. But more on that later. If we then continue to my favorites tab, namely the dividends tab, then you can see that I have received a little more than $180 in dividends in May so far, and they came from Bristol Myers and Verizon. And as always, I am focused on the long-term investing here. So what really makes me happy is when I look to my dividends for 2020, you could see that I received a little more than $2,000, and already here in 2022, in the beginning of May, I'm pretty close to my first full year result. So this just shows that my portfolio is heading in the right direction. If we then go back to the overview arc here and scroll all the way to the top, just so you can see how each individual stock has been performing within this week, well, the first thing that I want to address is the fact that I have bought an additional 265 shares of Store Capital. And then you might ask, why have you done that? You were down around 18% when you decided to do that. I fully acknowledge the fact that perhaps I paid too much for Store Capital when I initially bought them, since now I am able to add them into my portfolio at a much lower value. And I still haven't lost faith in the company. So here I don't think that I'm trying to catch a falling knife. Store Capital might go even lower than what I have paid. Well, it is actually lower than what I have paid just in my recent purchase. But what I'm trying to do is I'm trying to dollar cost averaging into this company. And I'm pretty happy to buy Store Capital when I get a dividend yield of more than 5.5%, which was the case for my latest purchase. If we look at column N here, then we also see one very interesting thing, namely that I now have the first position in my portfolio that pays me a yearly dividend above $1,000. So naturally, I'm quite happy to see that my latest addition of the additional 265 shares gives me around $90 every single quarter. So, of course, I'm pretty pleased with that. And just to illustrate one more point here, if we go to Seeking Alpha and look at the 5-day chart, on May 5th, Store Capital came out with a quarterly result, and you can see here that initially the stock started by increasing in value, but since the market overall turned negative, it actually dragged down Store Capital as well. So despite the fact that the initial reaction in the market for the quarterly result was positive, due to the nature of the overall market dropping, then Store Capital was dragged down as well. And this is one of my reasons for continuing to buy into a company, especially when they are still delivering really well results. If we then continue to my point regarding being down over the year, and if you are just buying an index fund mimicking the S&P 500, well, year to date, you would be down 14%. This will happen from time to time, and there's not too much you can do about it besides just letting your money be invested. If you can't handle that from time to time, you will be severely down. Go back in history, take a look at how my portfolio was performing back in 2020 after the market crash in March. I mean, if you go back 5 years here, you can clearly see how the S&P did back then. My portfolio was absolutely no exception to this. You can see that the S&P lost close to 1100 points over a very short period of time of less than a month. And if you are investing, you really need to be long-term focused. Otherwise, it's very easy for you if you just started in the beginning of the year and now you're seeing that you're down 14%, that you will completely lose faith in this investing, so you will just sell and quit. Well, look to my portfolio and see what has happened since 2020. It will go up and it will go down, but the long-term trend is upwards. Another way of illustrating how the market is behaving, meaning the S&P 500, is going to Finviz and once again look at year to date. And you can see a lot of the big companies are severely down, like Microsoft, Apple, Google, Amazon, Facebook. And these make up a significant part of the market, meaning the S&P 500. So if you are buying an index, naturally you would expect to be down quite a lot. And you can even see in the financial sector, JP Morgan, Bank of America is down. And my investment in Citigroup, I am down a little more than 20%, even though Citigroup is only down 14.5% for the year. But if you, for instance, take a look at insurance here, the best performing insurance company in the entire S&P 500 with the ticker code UNM, Unum Group, in my portfolio, up 47% within the year. This is one of the reasons why my portfolio is performing so well. Of course, it would have been ideal to have a lot in the energy sector, because you can see how well that sector overall is performing. And you can see that healthcare is also doing quite well compared to the overall market. So it is possible from time to time to pick individual companies and be capable of beating the market, but that would require a lot of work. So that is why I would still argue, if you don't have the time, if you don't have the interest, it's simply better just to buy the market and continue to do so no matter what the market is doing by a monthly savings plan. So if we go back and look at my portfolio, you will also notice here that Unum Group has had a really good week, since it is up a little more than 18% within the week. They also came out with a quarterly result, and on that day the stock increased more than 14% in value. And when you're looking to the market overall, you are currently seeing a lot of people talking about fear. You can see on Market Watch how retail investors can short the market if they wish to do so. There are a lot of people who really view the market negatively currently. But when I remind myself what I heard from Berkshire Hathaway regarding trying to time the market, well, Warren Buffett just invested $41 billion during the first quarter of 2022. So I think that I can spare to invest $7,000 into store capital. The market might go much lower than where we're currently at, but at the same time, I'm buying when I feel that I get a good deal for my money, since I have no clue to what the market will do. But overall, if a lot of people don't have any confidence, then you have to remind yourself about Buffett's words once again, saying, be greedy when others are fearful, and fearful when others are greedy. So that is why I decided to pull the trigger as well, since I have seen a lot of negative articles lately, and whether or not this will be a good idea, time will tell. The most important thing is I am buying when I think I can get a good deal for my money, and if I can't find a deal, well, then I simply don't buy anything. So that actually sums it up for yet another exciting week of the Lazy Money Game. So this was just me once again trying to give a quick update to my portfolio. And if you're feeling discouraged about investing here in 2022, if you have just started and you have bought an index fund and are down the 14%, which the market is currently down, well, I sincerely mean it. Take a look at my portfolio, see how it was performing back in 2020. If you have bought an index fund back then, you would have severely outperformed me. There's absolutely nothing wrong about buying index funds and holding them. For the majority of investors, this would actually be the best strategy you can do. I, of course, want to do something different, since I actually think it is quite entertaining to try and pick individual stocks. I mean, if you look at my portfolio, sometimes I'm doing not so great when you're looking to Citibank, where I'm currently down more than 20%. But at the same time, you can see that I have Unum Group in my portfolio, which is currently the best performing insurance company in the S&P 500. So sometimes you actually get lucky when you're trying to guess which companies will do great. So that was all for now. So if you have enjoyed the content and made it all the way to the end of the video, then please consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!